Hello, everyone. Today is Wednesday, July 2nd, and this is your 314 SMI investor update for the month. Fernando, how are you doing?
Doing okay. Let's jump into how the funds did here.
Yeah, so as always, this is the update that we do for the entire 314 SMI family of funds and consists of the FCTE ETF and the RAA ETF. As always, let's start out with the FCTE ETF and how we performed for the month of June. Well, the June was a bad month for the fund. Let's just be honest about it. The fund was, and I guess if you want to look at the glass is half full, at least on an absolute basis, we were up just shy of 1.2% for the month, but the S&P 500 returned over 5% for the month. So a 400 basis point lag. Not a good thing. And but part of the philosophy we have at 314, both on the research side and the asset management side, is to have transparency and to dig into these moments where we underperform, and of course when we outperform, and try to understand them, and always improve our processes and thoughts. So really, when we look at the fund for June, it was the problem was we sold out of almost all of our tech exposures. We had a pretty heavy tech exposure going through April and May, and we're beating the S&P for the year. And then the fund, because of the way it's structured, which we'll get into for a minute, it let go of some of those winners and bought some of the weaker areas within the quality universe. And so that left the fund underexposed to the tech sector. And you can see the results of that just by the one real bellwether tech stock that we had in the fund was ANET, and that drove so much of the performance for the month. It was really just a very narrow market and very much a tech-led market. So if you're underweight like the FCTE fund was for June, it was going to be a rough month. Also equal weighted strategy here, whereas the S&P 500 obviously cap weighted, and there was a lot of the leadership was on the large mega cap group once again. So kind of a groundhog day for many investors if you've been around since 2023, 2024, seeing this mega cap leadership in the market. So, as we spin it forward to July, the fund's doing what it's supposed to do. And let's remind everyone of that. So it's a 20 stock fund, equally weighted, so a very concentrated portfolio. The idea is not to track the S&P 500, but to diversify away as much as you can with a long only strategy. The first step is to take a quality factor, screen the S&P 500 for quality, and then grab the top 100 stocks. We then apply a trend overlay, and our research shows that the appropriate trend system for a quality universe is to look for an intermediate term uptrend and then a short term pullback. Intermediate, long-term uptrend, short-term pullback. And the flip side of that is if you get a really powerful trend that doesn't pull back, you can relinquish some of the leadership in the market, and you have these types of periods where you sell out of things like tech, where it's just been a relentless bid, and the system's reading that as saying, okay, let's rotate into something where there's weakness. So that's what we would say is the diagnosis for the underperformance for FCTE over the month. For the month of July, new picks were ADP, MasterCard, McKesson, PayX, RSG, and Visa. So a little bit of a theme here. We're seeing payroll processors, waste management cropping up, and one of the big sells here was ANET. So again, it's a little nerve-wracking to see so little tech exposure for the month of July. We'll see how that works out, but it's a bet on a somewhat of a rotation. We saw that rotation the first day of July, first trading day of the second half. Maybe it flows through and benefits some of these new picks. We'll see what happens. Let's move on to the RAA fund. RAA up 3.5% over the month of June. Green across the board, so benefited from this just overall asset uplift. We saw, not surprisingly, the underlying model had gotten back to benchmark weight. equities, alternatives, and fixed income. So we're running basically a 50% equity weight, 20% alternative weight, and 30% fixed income. The one negative area, very slightly negative, would be European equities and real estate over the month. You saw some mean reversion there. Within the month, the big story was this Israel-Iran conflict and the blow up and the spike in oil prices. That was something the fund did benefit from. So if you were looking at the path at the very least that we traveled, having that exposure to commodities really smoothed out the path of returns to the month when you didn't necessarily get that everywhere. So we did get some of the benefits from energy and commodities in the returns this month, in Bitcoin and gold also being drivers here. So positive month, also some fixed income. So it was across the board a positive month for the RAA fund. Let's go ahead and look at July, how we're positioned for July. So a mild dial down in equity weight. Really, if you look deeper in, this is the 20 assets that are broad asset classes that RAA. This is from this table's from the 314 research service, where we produce this model on a daily basis and show what it's thinking. Yes, the overall equity is lower, but when we look at it, NASDAQ plus S&P 500, only a very slight underweight when you combine those two. Really, we're seeing a dialing back of dividend payers. So that's really value stocks. And that explains small caps also getting dialed back. So that explains kind of the modest equity underweight. I wouldn't say it's a defensive positioning though. When you look at it, Bitcoin's an overweight, commodities are an overweight, gold is an overweight. Not a lot of managed futures, which when you see managed futures spike in this model, I take that as a very defensive sign. If you move down to the fixed income level, you see a spread product dominating here. Spread product still has a risk component to it. You're talking about investment grade corporate bonds, high yield bonds, both being sizable weights within the portfolio. So a nice mix of assets here. It's really, especially when you consider the path we've traveled, it's been a very smooth return stream. And even though the fund is only came into existence on February 26th, we still got a good stress test to see how it responds to a lot of stress. And the drawdown was about half of what you see in some of these other competing funds. And I think that's the beauty of this strategy, is that given the amount of diversification, the trend following overlay, we should be able to minimize or at least cut down on the downside and still capture upside during these rallies. So that's the story for the funds for the month. Fernando, do you have anything to add?
No, that's a good summary. So FCT sort of positioned for a broadening of the rally that we've seen take the S&P to new highs, and the RAA sort of being close to its benchmark after more or less having just a single month that it was underweight equities, basically getting back to market weight on equities and not too defensive. I think that's a pretty good summary.
Yeah, I think that the one of the big themes that we see, it was really what gave birth to the RAA model at 314, is we do think that the investors writ large are transitioning from a deflation mindset to a debasement mindset. This is something we'll talk about more in these videos as these months go on. But the bottom line is that a debasement mindset is you need to manage your assets in a way where you can keep up with maintain purchasing power versus protect principal. I think in order to have the confidence to maintain your purchasing power and stay invested, you need diversification. You need a large menu of assets to move into as that liquidity blob shifts around over these years. So that's kind of a very high level principle that's built into the RAA fund, and I see it paying dividends already. So and literally paying dividends for the first month here that we've seen an RAA dividend yielding about just under 2% for the fund. So we've had some questions on that. So as always, please thank you for watching the video. If you have any questions, you can reach out. We have contact information on the site. Until next time, have a good month.